There is a currency that is absolutely pumping right now, and most people have heard of this currency, but they don't realize it's actually going up at all, which is quite amazing and surprising to me. But the reason isn't a lack of information; it's that psychology, our human psychology, is biasing us to not realize that it is pumping. So I'm going to discuss what that currency is. No, it's not Bitcoin. I'm going to discuss why it's pumping, how long is it going to continue to do so, and can you make money on it, whether it's going up or down? The answer actually surprises you because you can make money both ways. So, without further ado, before we get to what currency I'm talking about specifically, we have to talk about Bitcoin to give some context. So, right here, we are looking at Bitcoin as most people are used to looking at it. Right now, Bitcoin is trading at just over 26,000 US dollars. It's up to $18,900 in the last 5 years, which is roughly 260% here. So from 2018 all the way here to 2023, when most people look at Bitcoin, this is what they see. They see, oh, look, it's flat, and then it pumped here. We have one big pump, and then another big pump, and then it's crashed since then. And most people assume that it's falling into oblivion, similar to what they perceive here in the past. And the problem when people look at Bitcoin from this frame of reference is that they're looking from a frame of reference they don't even realize that they're looking from a frame of reference. They are pricing Bitcoin in terms of dollars. If I were to say to you, what is the price of oil, but your unit bias or your vantage point that you're looking from is gold, well, that's something really important to keep in mind because your oil price is going to be dependent on the value of gold, the relative value of gold in the world. You could say the same thing about real estate through the lens of interest rates, or you could say the same thing about any two commodities. You can compare oxygen to the Mona Lisa, like I've often done so before. You can compare Ethereum with euros. Everything is an exchange rate. And so when most people look at Bitcoin, they tend to think that, oh, this is an absolute equator of value that Bitcoin is rising and falling against. And the problem with this assumption is that it causes us to forget that when Bitcoin is falling, it's actually the dollar that's pumping. And that's the main idea that I want to get to here. See, most people have heard that Bitcoin has fallen significantly in terms of the US dollar in the last week here. In fact, Bitcoin has fallen quite a bit. But I posted a reverse psychology counterintuitive chart on Twitter here a couple days ago about actually the dollar was pumping. See, what we see here is that the dollar has been flat for an extended period of time. And then at the time me posting this on August 17th, the dollar absolutely spiked upwards here. It dramatically went up. Let's see, 16,000 views, a couple hundred people liked it. Some good comments here. We have some interesting comments here, not seeming to understand the point I'm trying to make here. Some awesome gifts. And anyway, this is what Adam said here. This is the main point um, of the message I want to make here. So if this is a couple days ago. If we look in real time here, this is what we see. So this is the US dollar in terms of Bitcoin. Again, looking at the same exchange rate, except instead of looking at Bitcoin through the lens of dollars, now we're looking at dollars through the lens of Bitcoin. And what we see here clearly is that the dollar has skyrocketed the last 2 days. The dollar is up 11% against Bitcoin in the last 5 days here. In the last day, it's down 2%, but really last 5 days, it's up 11%. Last month, it's up 13%. However, if we zoom out, in the last 6 months, the US dollar has fallen 8% against Bitcoin. If we go year to date, it's down 40% against Bitcoin. If we go out a year, it's down over 20%. 5 years, it's at 72%. And maximum, it's over 98% followed against Bitcoin. And so what's my point here? Well, my point is that everything is an exchange rate, and both statements are equally valid. It is entirely reasonable to say that Bitcoin has fallen 10% in the last week in terms of the dollar. And it is equally valid to say that the dollar has pumped 10%, 15%, or whatever in the last week in terms of Bitcoin. Both of these statements are equally valid. And so if you're going to determine what side of this exchange rate you're going to be on, you can't look at the last week, you can't look at the last month. You have to think longer term and evaluate, okay, which of these is trending up or trending down against the other one of these. See, you already think in terms of this. When you save for your retirement, many of you probably save in bonds, stocks, real estate, gold, and other commodities. Typically, people have a 60% bond allocation, 40% stock allocation. Sometimes those allocations are reversed, 2 to 10% in other speculative quote unquote assets. And really what you're doing there is you're simply betting on the long-term exchange rate. See, stocks tend to go up over time because the exchange rate of US dollars in terms of stocks continues to fall down over time as the value of the dollar falls down over time in terms of stocks. And so just by reframing that frame of reference, you begin to realize, oh, wait a minute, it is equally valid to say that the US dollar is continuing to fall indefinitely against stocks. And so what you're doing is you're preserving your purchasing power in stocks instead of dollars. And see, we only look from the other perspective that we think, oh, stock market's pumping, the stock market's going up perpetually, and I think they're two very different things because it's the same thing, but there's two very different statements, psychologically speaking. See, with one of these statements, you're saying, oh, look at how much money Wall Street's making. It's just going up and up and up and up and up forever. The stock market just keeps booming. It's wonderful. I'm making so much money. But you look from the other perspective, what you realize is that, oh, wait a second. Wall Street is just preserving their purchasing power. The value of the political currency is just declining over time. And I think these are both equal statements. I think these are both equally valid, equally true. And so again, if we look at Bitcoin in terms of, if we look at the dollar in terms of Bitcoin, it is pumping here. Now, given this different way of looking at price, psychologically speaking, this has us reach some different conclusions. Because we look out farther and farther and farther, this no longer looks like what most people think, oh, look, Bitcoin's crashing and it's going down perpetually. People look at it and they realize, oh, wait, this is probably just a short-term temporary pump. I mean, this is not a strong-looking chart. This is not a strong-looking chart. It's lower, high, down, 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 go out to 1 year. All of a sudden, right here in November, December, and January of 2022 and 2023, all of a sudden, this no longer looks like a crash in Bitcoin price as we see down here. Let's go at the similar time frame. Yeah, so see, this is Bitcoin in terms of the dollar. This looks like a crash. I remember at this time, people thought, oh, Bitcoin's dead, it's going down, it's just going to keep going down perpetually forever. And in reality, I was looking at it from this frame of reference of like, oh, wow, look at how hard the dollar is pumping right now. All of a sudden, this looks like a distribution. People are forcing the dollar up, they're distributing it onto holders, and then they sell so that they can make their money. And again, it's just the vice versa here. And so if we look back farther and farther in time and we see this repeated, again, same chart, it's just inverting it. This is Bitcoin in terms of the dollar. This is the dollar in terms of Bitcoin. You see a clear trend here. All of a sudden, Bitcoin no longer looks like a Ponzi scheme that is pumping up and up and up indefinitely forever. It looks like that the dollar is a Ponzi scheme that is pumping down and down and down forever. And I believe both of these are equal statements, which is why these kinds of tweets I make intentionally get some controversy. Those with ears shall hear. So some people, some of these comments are so funny. Yeah, anyway, it's quite funny. Here, let's have a little comparison here. This is XRP. XRP is a centralized security token of the Ripple Foundation. And I'm not pulling up XRP specifically to make fun of the XRP or people that hold XRP. I'm using XRP as an example. See, to me, XRP is a very extremely high-risk speculation on short-term profits. I do not own XRP. I've never owned XRP. I've never advocated for XRP. And in fact, recently, when XRP had a major pump here in the last couple months, here in July of 2023 with recent news of the SEC, now since XRP has continued to fall since then. And so when XRP had this massive spike here, what did I encourage people to do? I made multiple pieces of content. Some of my most popular tweets and YouTube videos at the time were talking about XRP. And I was encouraging people that, hey, you might want to sell, you might want to lock some profits from your high risk XRP, save those profits in terms of Bitcoin, because Bitcoin is significantly lower risk than XRP. And so what's the point in making here? Well, in the same way that you should probably take profits from your XRP because it's just trending down against Bitcoin perpetually, the same thing with the dollar here. You have this massive spike of profits here. Probably you should take some profits before it continues to fall down over the long term here, because the more you zoom out, the farther down it's going. You can look at the short term. You can make fun of Bitcoin being down roughly 50% from all-time highs. But again, remember, Bitcoin's only down 50% in terms of the US dollar. What if Bitcoin has not fallen 50%? What if the dollar has doubled? Okay, we have just had the most aggressive rate hikes in modern American history. The Federal Reserve has skyrocketed interest rates, and money standards have become incredibly tight. We've gone from record quantitative easing to record quantitative tightening. The economy is having significant troubles. Obviously, some parts are good, some parts are not so good. We've had major credit risk. We have tightened lending standards of the US dollar so much. We have enforced scarcity of the US dollar so much. And yet, this is all we can get. This is all it can get. This is as far as our extremely tight monetary policy has enforced the scarcity of the US dollar against Bitcoin, because we can't force it to be any scarcer. Otherwise, we'd have a credit unwind, a credit collapse. So what's my encouragement here? Well, you can do what you want. I'm not your financial advisor, but Bitcoin is a commodity. It's not a security. So I can recommend you should probably get off zero. You should probably take your profits from these high risk venture capital securities like XRP and other crypto tokens. You should probably take your profits away from political currencies like the yen, the euro, the US dollar. Because over the long term, all of these high risk things will continue to fall in their exchange rate against the lower risk thing, which is Bitcoin. And people have trouble understanding that. Bitcoin is going to go up again dramatically in terms of all these other exchange rates, in terms of all these other assets, but first and foremost, because it is a lower risk asset. All these other assets require human oversight. They require human management. They require humans to enforce and loosen the scarcity of those assets. Bitcoin does not require human oversight. And for that reason alone, Bitcoin is far lower risk. For that reason alone, Bitcoin is going to skyrocket in the future. And for that reason alone, it is an extremely high risk and extremely speculative gamble to bet against Bitcoin in the long term.